I want to talk about what really represents 1 in 3, maybe more than that, maybe 40% of all the calls we get in the mortgage brokerage business today. 40% of all the calls we get are the same thing. I've got a variable rate mortgage. It's crazy, batshit crazy high, and I need a solution. I need a solution to my crazy high mortgage, variable rate mortgage. I gotta do something. I gotta lock in. I gotta escape from this constant increases. Because as of today, in the last 6.5 weeks, it's gone up another 0.5%. 2 different announcements over the course of 6 weeks. It's gone up 0.5%. Maybe the last, but we don't know. After the shakeup we got when the Bank of Canada quit raising rates in the winter and then started raising rates again, everybody's shook up, don't know what to do. What's going to happen? Is there going to be another increase? Personally, I'm thinking it won't happen. There won't be another increase, but I don't know. Predictions are crap business. I don't have that answer. So I appreciate that people can be scared, but let's break it down. Is it the right time to change over to a fixed? Is it the wrong time? How to do it? How to calculate it? Let's break it down. So first of all, variable rate, your interest rate is probably in the 6% range today. Probably started around, I don't know, somewhere as high as like 2.5, somewhere as low as like 1.25, like crazy low. And now they're probably all up in the high 5s. Most of them are in the 6s, somewhere between low 6s and mid 6s. You're paying somewhere like 6.25%, 6.1, something like that. And again, we got to break it down further. So some people have a variable rate mortgage where every time the Bank of Canada announced an increase, your mortgage payment went up every single time. It's good news and bad news. Mostly bad news, because your payments have gone up probably, I'm guessing, 50%, probably 50% in 15 months, 16 months. That's a killer. So that's hard. And a lot of those people may have already locked in. A lot of those people who saw those constant increases have locked in. Some of them are looking to us, to mortgage brokers and bank reps for answers. And it's not that great. Right now, the best rate you can get is like percent. It's in the 5% range, might be high 5s, might be 6. I mean, it's not much different than what you're paying right now on the variable. There was a moment in time, let's say March, April, half of May in 2022, this year, when the rates were in the 4s, and that might have been a good time from a mathematical point of view to switch, but it's gone. So let me give you the other category. The other category are people whose payment has not increased, but their interest rate has severely increased. Their interest rate is in the 6s on a variable. They just had a contract. 4 out of the 5 big banks have contracts which don't automatically match the increase. It looks like the payment's staying the same. But you look at your amortization, you look at what's happening to your mortgage, and you realize, my God, I'm not paying off my mortgage. I mean, in some cases, the mortgage is actually growing. I kid you not. The mortgage is actually growing. And that, folks, we have a technical term for in the mortgage business. That is a fuck up. Okay. When your payment's not changing, but your mortgage is growing, you feel okay about it. You might feel, oh, I feel good because it's not changing, but oh, I think I may be in trouble, because when the mortgage renews, I'm going to have a bigger mortgage than when I started. And I'm going to have to go to a standard amortization, might be 25, might be 30 years. And my payment is going to go up 50, 60. I don't know, because my mortgage keeps growing. So it's still a bad situation, even though the payment hasn't jumped. It's a very bad situation. The Bank of Canada regulator, the Bank Regulator of Canada, the Office of the Superintendent of Financial Institutions, is pushing their banks to say to those customers, hey, we think you should really increase your payment big time right away. They're putting pressure on, the regulator puts pressure on the bank puts pressure on their customers. So everybody's feeling the heat. Nobody wants to have a mortgage that's growing. And certainly if your mortgage payment's gone up 50%, you got a reason to call around. So first thing to know, talk to your own bank first. They can switch you to a fixed for free, for no additional cost, for no penalty, no nothing. They just, here, sign here, and it's fixed. But here's the problem. They only will let you go into a 4 or a 5 typically. A few will allow you to go into a shorter term, but mostly it's a 4 or 5 year. And that's a long commitment at what's a very high rate that's in the high 5s. Oh, and by the way, since they knew there was no penalty if you stuck with them, they're not giving you the very best rate. Like sometimes they're giving you a pretty good rate, but quite often not the best. You're tempted to shop around. Here's the problem. If you shop around, you've got to pay a penalty. And on average, that penalty will look like about $5,000 or $7,000. On a great big mortgage like $800,000, that's going to be about $15,000 penalty. So you got to be careful. You can save, but if you give it all back in penalty, it just was not mathematically the right thing to do. So what's the advice? It's like this. Probably you just need to hang in for a little bit, particularly you people who have the payment that doesn't go up. You should probably hang in for a little bit, probably in the late winter of next year, like if we're thinking about January, February, we might see some rates back in the 4s again, and then the math may support it. But be careful. You got to do the math first. Know what your penalty is. Know that you're actually going to save money. Take a short-term rate, 2-year, 3-year, because eventually, like every cycle that ever existed, eventually when something goes up 200 or 300%, it comes down. Doesn't come down all the way, but it's going to be a better rate, a much better rate than we're getting today. In sometime next year, I would think, the year after for sure. That's why a 2-year fixed or a 3-year fixed, work the math, check the penalty, see if it works. You got to know that it's to your advantage.